Chapter 15 is all about global business transactions and the types of things that affect global business transactions. In these examples, we're going to be looking at exchange rate translations for different currencies. In this first example, we're looking at euros to dollars. So we want to know what is the equivalent of 17,900 euros in US dollars. So we look at the exchange rate here, and we see that for 1 US, it takes 1.16 to translate US dollars to euros. So 1.164538. So what we would do is take that factor times 17,000. So the factor exchange rate times 17,900 euros equals $20,845.23. So the equivalent in US dollars today for 17,900 euros. The next example, we're looking at Brazilian reals, and we want to know what is the dollar equivalent. So we go back to the exchange rate list and look up Brazilian reals. So we see for every $1, we get 5.748388 reals. So what we're looking at is exchanging the real to a dollar. So the amount we want is 0.173962. So 0.173962. We take that times 7,000, and we get that the US dollar equivalent of 7,000 Brazilian reals is $1,217.73. In our third example, we're translating US dollars into another currency. So we are looking at South African Rand for that currency. So what is the current exchange rate for South African Rand? So if we scroll down here, we can see that for every US dollar, we get $16.28 respectively in South African Rand. So 16.27541. So we take that times our 3,000 US dollars. And our equivalent is 48,826 Rand. So if we exchange $3,000 into Rand, we would receive 48,826 Rand. In our fourth example, we're exchanging euros for Swiss francs. So we want to come here, and we're right now looking at the rates for US dollar. We need to exchange those to a euro. So when we look at a euro, we're looking at what a euro is trading in relationship to a franc. We see that the euro to Swiss franc exchange is 1.067788. So we would take our amount times 1.067788. Take that amount times 150, and our exchange is 160.16 Swiss francs from euros. So we would not have enough money to purchase this souvenir. In our next example, we're taking an example from the book that discussed about Barbie global costs. So Barbie, we get materials from 4 different countries for a Barbie. We perform direct labor in China, and we have overhead in Hong Kong. So at the time of our textbook printing, The current export cost of a Barbie doll is $2. And what we're looking at this example is what is the rate, total export cost of a Barbie doll in today's rates, and has the cost increased or decreased? So we're going to change back over to the US dollar amount and get our calculations. So the first currency that we're looking for is the Saudi Arabia Rial. So the exchange for a Saudi Arabian Rial is 0.26666. And then the Taiwanese dollar. So the Taiwanese dollar exchange rate is 0.034952. And the Hong Kong dollar is 0.128965. The Japanese yen, 0.009558. And Chinese, 0.149412. So we see that in today's exchange rate, the total export cost of a Barbie is $2.12. In our last example, we have a company that is trying to decide which country it should manufacture and sell a product in. So it has two manufacturing plants, one in Thailand and one in Mexico. We are looking at sending components for a product which will be assembled and sold in that country. We want to see what is the per unit amount in each country for income, and what does that translate into for US dollars. So first we're going to look at the income per unit in their country. So we have our sales revenue per unit from our information here, the cost of components per unit, and then we need to calculate import duties. So we see in Thailand we have an import duty rate of 4%, and in Mexico we have an import duty rate of 12%. So that is 4% of, in Thailand it's 4% of the components that are being shipped to Thailand for assembly. So we take the rate of components times the import duty rate. In Mexico, we take the rate of components times our 12% import duty rate. We then have assembly costs in each country. And our pre-tax profit per unit is the sales revenue per unit minus the sum of our three costs. We then need to calculate what the income tax expense per unit is based on the tax rate in that country. So we take our pre-tax profit per unit times the tax rate. In Thailand, our tax rate is 30%. And in Mexico, our tax rate is 28%. Our profit per unit is the pre-tax profit per unit minus our income tax expense per unit. So we now have the profit per unit in Thailand and Mexico in those countries' currencies. And what we need to do is determine what the profit per unit is in US dollars. So we want to calculate what the exchange rate is for each of these currencies. So we have what a dollar exchanged to. So we know what a US dollar will buy for baht and what a dollar will buy in pesos. We need the inverse relationship of that. So how many bahts does it take for a dollar? So we are going to take 1 divided by 32.5 to get our exchange rate amount. And in Mexico, we would take 1 divided by 12 to get the exchange rate amount that we're going to use for conversion. So we take then our profit per unit in that country's currency times our calculated exchange rate to determine what the profit per unit is in US dollars. So we see that the profit per unit in US dollars is higher in Mexico than it is in Thailand. Now we want to look at the total profit. So we're not only going to assemble this product in that country, we will sell that product in that country. So we'll look at our projected sales in units per country to determine what the total profit is. So we take the profit per unit times the number of units we project we're going to sell. So 14,000 units in Thailand and 10,000 units in Mexico. And what we calculate that our total profit in US dollars is significantly higher if we send these components to Thailand for assembly and sale.